On today's episode, we are going to take a look at two growth stocks that Ark is investing very early on. Even if you don't care what Ark does, I want to say these two are some good ideas to have. The first company we're going to take a look at is a semiconductor company that's kind of dealing in the genomics world. The second one is going to be a software automation robots company. The first company we're going to take a look at is Quantum SI, and Ark has been purchasing this stock for about 4 days in the past week. They purchased Monday, Wednesday, Thursday, and Friday. Again, I got this from their email. And what does Quantum SI do? So best place to go is their investors FAQ. This company has a suite of technologies that are powered by a first of its kind semiconductor chip designed to enable single molecule next generation protein sequencing. You might be like, Jose, what the heck is protein sequencing and why should we care about it? So again, here if you go on their website, you can kind of get more information. So proteomics is the fastest way to better therapy development. While DNA or DNA sequencing gives us a blueprint of what could happen, the proteins tell you exactly what's happening in a cell right now. They tell you what is there, how much is there, and how has it changed. And I mentioned earlier in this episode, right, that these are very early on businesses. And what I mean by that is either their production right now has not started, or they're very early on in the overall business. Quantum SI, they kind of have products, right? They're developing two products. They're calling it the Carbon, the Platinum. Then they also have a platform, which is going to be called Quantum SI Platform. And here they're saying that their platform, I do like this, their platform was not created to kind of compete against other platforms or to kind of push their products. You can kind of use other products with their quantum platform as well. I think this was a smart move, right? Especially as early on, you want people to kind of try your platform without having the need to really purchase much. And if you create a very strong platform, they're going to start to be like, okay, their platform seems pretty cool. Maybe we should focus on investing in some of their products also. And another thing, they are making their products are expected to be accessible to all. By that, they mean they're expected to be cheaper than the normal cost. And the second thing is their products are a lot smaller than their competitors. Like I mentioned, this is very early on in its business. For example, all of them, the Platinum coming in 2022, the Carbon also coming in 2022, the QSI Cloud is also coming in 2022. And before we keep going, guys, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. Also, make sure to hit the thumbs up and the subscribe button and let me know what are some of the new companies you're taking a look at right now. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. So QSI right now is traded under the NASDAQ as ticker QSI. It's currently sitting at $12.54. It was actually up about 4% for the day. Like I mentioned, I don't know if I mentioned this was a previous SPAC. So the SPAC has kind of finally merged from that SPAC all-time highs. The stock is down about 44%. We saw that overall excitement in SPACs earlier on in the year, and in the past 5 days the stock is up about 4%. Like I mentioned, Ark bought it almost every day except Tuesday. Some recent news about Quantum SI. They recently, on June 24th of 2021, so about a week and a half ago, they signed an agreement to lease operation facility. These operations are expected to begin in Q3 of 2021, so not too long from now. And the new facility is located in Sorrento Mesa and is being designated to scale production and expand research and development efforts. They do mention that this is kind of in the hub of San Diego's biotechnology market, so they are expecting huge growth from just talent as well. So that was a smart move. If we take a look, I just want to jump a little bit on their overall financials. Remember, they're not profitable right now. They're not positive in cash flow from operations. This is a very, very early on business. So what do you want? You want to have a company that has a lot of cash. Right now, based on the current price, the company has a market cap of $1.7 billion. In the overall pro merger, they would have about $500 million, about $536 million in cash, which is great, right? That's what you want, a company with a lot of cash and no debt to their name. So it looks amazing. If you take a look at this company's 2023 revenue, EV to 2023 revenue is expected to have a ratio of about 18.5. It's not that crazy, right? The more important thing is how this would grow afterwards. 2023, that's not too far from now. 2 years from now, that's normally where I tend to like hit my max limit of what a company is expected to grow. We've seen a lot of SPACs recently where they give you 2025 estimations and expectations, and they don't even reach it, or they kind of fix it a few months later. Where 2023, 1 to 2 years, I think a lot of that risk has kind of been eliminated just because there's a lot more foreseeable future available to them of the overall market. The second company we're going to take a look at is UiPath. This is a software robot company. Again, very early on in stages. I want to say this is probably a lot further on compared to Quantum SI, where Quantum SI does not have products. UiPath does, right? And they have a lot of customers and they're growing great levels. They have great cash. But I do want to say this overall robotics automation is still very, very early. So that's why I call it early investing. So here they kind of have software robots that can help do a lot of what many might consider like the busy work. And they actually learn throughout to make it faster, and they can continue to do even stronger moves. So right here, example, they have a perfect example. A doctor before UiPath might take them about 5 minutes to complete this task with a patient. With now, if you have your doctor and you have a robot, and this is the thing, right? It doesn't eliminate everything. It just eliminates a lot of the busy work. So now you have a human and a robot working together, and now the task takes less than 1 minute to make, freeing up the doctor by almost 80% of the time, right? So great thing. UiPath right now is traded under the New York Stock Exchange as ticker PATH, PATH. It's currently at $66.55. This is one Ark has been buying a lot throughout the weeks. This past week, it actually bought 3 times. It bought Monday, Tuesday, and Wednesday. It currently has a market cap of $33.86 billion. If we take a look at some other companies highlight, annual recurring revenue is insane, 653 million, and it's growing. The growth is insane. Right now that number is pretty low, but it is growing at a rate of 64% year over year. That's insane. Dollar-based net retention rate is $145%. They have over 85,000 total customers as of April 30th of 2021, over 1,105 customers with over 100,000 of annual recurring revenue. And we can see just the overall growth compared to a quarter ago. So 104 customers with over $1 million of annual recurring revenue compared to just 89 a quarter ago. So strong growth. This is not a company you want to look at in forms of revenue. This is more of annual recurring revenue. That's a better metric. This company is expected to grow 27.7% on average. They're not profitable, like I mentioned. These past trailing 12 months, they have become positive in cash flow from operations, but they're expected to go back in the negative. Expect to burn about $25 million in 2022. That's not too bad, right? Especially since this company has about $1.9 billion in cash and short-term investments. So this is nowhere near a company that I believe will go under anytime soon. Plenty of cash. Not burning any money, in my opinion, barely anything compared to their balance sheet, growing at crazy levels in a pretty interesting market. I want to say the only thing that many investors might say is, in forms of valuation, this might look pretty expensive. But again, it's very early on. Some recent news on June 23rd of 2021, they kind of mentioned that their robots passed the Type 2 examination, or SOC2. This is more of just an overall, this kind of demonstrates the company's commitment to data security, confidentiality, and availability. And having these types of criteria's passed, open up brand new doors, right? Certain customers are not able to use certain software, certain products if they don't meet certain requirements. SOC2 is usually one of those requirements. So again, it opens up new doors and new customers. Any other recent news? Yes, another thing I actually enjoy about UiPath, RPA, robot processing automation, is actually a very new concept, right? Very new concept, especially in the overall job career market. So UiPath is really trying to become the platform leader here, and they're actually offering free courses and really in-depth courses about RPA and how to use their platforms, how to pretty much become an RPA engineer. And they actually have a community here on their website. It now grows to 1.5 million members, and they have community boards as well to bring job careers and just announce the overall job announcements to help their members get jobs. And again, now those members who are very familiar with UiPath are gonna push their platform to the new company that they're going to go work with. Now, if we take a look at technicals, both of these are very early on in business and just very early on in the overall market. Path is a recent IPO. It IPO'd at $56, so it is a little bit higher. Hasn't really extended much from its IPO price. We can see at one point it got as high as $90. Right now, I want to say there's not much overextension. If we take a look at QSI, since it was a SPAC, I mean, $12.54 is a little bit higher than it was, about 25% higher than where it was valued at. It is a bit overextended. I do believe there is a chance of a pullback, but it's not crazy. These two companies, if I share my thoughts, if they were to enter my portfolio, QSI would be a very, very small position, right? This is one that, even though a small position, if they do what they're saying they're gonna do, it can be huge growth in the portfolio, but still a lot of risk, especially since they're pre-product revenue. So QSI would be something super small. UiPath, on the other hand, it's a little bit more advanced. Even though it's a recent IPO and the market is still very early, this would probably be like a low tier 2 stock. And the more I keep looking at it and more reading about it, the more excited I get about UiPath. At the moment, neither of these are in my portfolio, and I'm not planning on adding on them this week. So take care, guys. Have a good night, and see you next time.